Good evening, guys. How are you? It is Casper here with a Twitter recap. I think 2 hours or 1 hours before the futures markets are opening here for this week. So let's dive straight into the business here. Again, with the Twitter recap, I basically go through what I've been reposting during the days and my own charts. Just 10 minutes, very quickly. So. Good. Here we have Jay Hinster with CCJ, so very possible outcome. So what he's showing here is a nominal scale or regular. You can see this a bit of expanding support and resistance, quite dead on, by the way, and this could be the sixth where we are going to hopefully bottom here, and then we have a bit of a rally. And personally, I think we are at least going to see some sort of a bounce. How high it will be, we do not know, but definitely the sentiment is down the drain. And ever since we had that little topping pattern there, I think the measured move has been met. And yeah, we shall see. What is also very helpful is hopefully the gold-silver ratio starts to come down. And when that happens, the mining sector in general will do really, really well, which is a thesis that I have been explaining and showing quite a few times as well. So interesting, interesting. Also here with Jordan, so silver versus the 60-40 portfolio breakout to a 4-year high. This is silver against the 60-40 found that mirrors my 60-40 data. So breaking out of a 4-year high on a daily, weekly chart. This is pretty cool. This is actually silver starting to outperform what has been the number one get-go is to do the 60-40 portfolio. And I would think if you were to draw a parallel or a trend line from here to here, we're actually close to breaking out of that whole structure as well. So we're talking 10 years of a breakout in this time around. And a bit of a weird, moving average, but definitely long-term, mid-term, we are above. If we start to surge here, again, these moving averages should start to turn up and push this ratio or this price higher. Truly an interesting time for silver. Not gonna lie, it's very, very, yeah. Denison Mines here from Jay Hinster. Very attractive buy. So what you can see is one trend line, and you can see you have these lower lows here and the bullish divergence on the MACD. Again, I don't use the MACD, but you can see here very similar into support. Again, I expect a move here. We have come down from 2.4 and we're now at 1.2, so we are off 50% from the highs. Truly detrimental to the share price of the uranium stocks. The only thing that has done somewhat well during that period is definitely the tech side of uranium. We're talking Oklo, SMR, even though they have been selling off quite a bit here for the past few weeks. This is me here. This is platinum on the 1 weekly. So we're looking back roughly 20 years. It's a long time. So what you can see here is, the big one for me. Again, once we start to trade north of 1,050, maybe 1,100, then we are breaking this 20 years downtrend. And that, again, when and if that happens, platinum will be an extremely good investment, very good risk reward ratio at that point in time. But of course, we need this to break to the upside. There is still a risk that you can break this lower little trend line here. You can see it right there. If we start to trade, south of, I will say, roughly 900, maybe a tad lower, that is when things gets dicey, and we could see the third flush, and a flush that you don't need to, but buying into that flush, just like oil, in 2020, could reward you heavily down the road. So interesting times for platinum. Good old Platty. Here we have the USD WTI. So this is the oil chart. So the oil chart is still maintaining the long-term golden support, which you can see again from the highs from 2008 all the way down. We're still holding it. However, as we approach the $60 level, the risk of a sharp downward flush increases. So what I mean here is that we have this support here, and if we start to trade below the golden here, we could see a sharp sell-off in the oil price. Again, we shall see which way this 4 or 5 year triangle, which way it plays out. But we did have a little early pop there. Could be a fakey, but again, as long as we hold the golden downtrend, excuse me, the golden support, it should be all good. This is the gold-silver ratio, which at this moment here, and especially last week, we could be having this, overshoot here, bullish overflow here, whatever you want to call it, false breakout. And once we start to trade below 88, maybe 87, I think we have a false breakout. We're losing a horizontal support as well. And we could be going all the way down to like 70 here. False breakout, you usually go to the other side of whatever fractal you had a false breakout from. In this case, the lower golden here, roughly 70. That is definitely where silver starts to shine in relation to gold. And gold hit 3K last week, and I think silver hit 33. Next up, we have what do we have? We have MicroStrategy here actually. Was just looking at it here from a different perspective, where we measure the price against the 200 moving average, so like a momentum indicator. And we have been bouncing off the 200 quite a few times. And if we start to trade below, that is game over for MicroStrategy. But also on the bullish side, again, we have a bull flag here. We have bullish momentum, potential breaking here. So this week, we could see a huge move for MicroStrategy if we break above here. And then the momentum should follow. And on the other hand, if we can't, hold these two lows here at roughly, what is that, 238, we should drop down from the momentum also, and that will be a very difficult time for MicroStrategy. Next week, I think we will have a clear direction of MicroStrategy and also, therefore, crypto. Bitcoin here, this was a 2-hourly chart of Bitcoin, so you can see here we had a very, very tight range for the entire weekend. This is Friday, tight range, tight Bollinger Band, and we actually broke down here and we back tested it after I posted this. Again, extremely tight 1K range here for like 3 days. That gave you this very, very tight Bollinger Band. So we broke down from the red wedge here, and the very bullish view for Bitcoin will be if we can break roughly 84, and then you break the downtrend here. But again, these very, very tight Bollinger Bands, they often have a very good risk reward because you know exactly when you're wrong and when you need to get out. Here we have XAU, so that is gold and silver miners divided by CEF, that is the broad gold and silver physical trust. Again, the miners has not broken out against silver and gold in general. So we have a lot more. When that happens, that's the fun part, by the way. Also, from a momentum point of view, you can see here we haven't really been pushing up just yet here, and we still have some work to do. So once we start to break the momentum and the downtrend, that is when mining, is going to boom heavily. And yeah, we still have some way to go for the miners to really do some funny stuff here. URA, the uranium mining ETF, is attempting to establish a bottom here at its current price of roughly $24, $23, $24, which coincides with a key historical level. Despite this, the ETF remains in a downward momentum here. You can see we're still coming down heavily. So again here, I hope we hold here. Again, I would also say if you were to do the count, we have the first impulse, the second, the third. So again, hopefully we hold here and we can start to to put in a low here over the next, I will say maybe month, 2 weeks to a month time is needed to undo that whole downward pressure. Again, the tech side of uranium, we're talking OCLO, SMR, LEU, and LTPR. They had a really good Friday, but they are still somewhat linked to NVIDIA. Good. And yeah, I think we will just leave it here. And yeah, again, check out the videos that I've been posting during the weekend in gold, silver, uranium, and more. Have an amazing day, guys. Cheers. Bye.